Welcome to TradeTheNBI.com. This is John's Reports for the 9th of July, and look at that beautiful rally continues as the exuberance never ending into the easing cycle that's about to come because it's just like right around the corner. Of course, we've been saying that, well, not we, but the Fed has been saying that for 9 months, a year almost now, and for some reason haven't been able to pull the trigger on it. So now somehow it's miraculously everything's changed. And yes, the data has indicated that there's softening in that. But we really haven't seen too much of a fade in oil that would justify the ability to cut. Of course, they say inflation is coming down. Uh, is it? Or just they realize that you're facing a wall right now as consumers are pretty much racked, and you can see the softening for expectations for businesses as well. From an NQ standpoint, even stronger than the Nasdaq, and clear silent under red. So on the DOC here, always a buy, and shakeout consistent here now, taking out the previous high, which on this was 2408, and we're currently sitting 2450 if that holds up through the day. So that would be an improvement. We'll see if it's able to sustain that. And of course, Treasuries making the reversal after heading the what I would say correct direction. They've inverted again as the yield continues to drop. And who's buying that? No idea. But I feel bad for them because it's a piss poor trade, as you might want to call it. Certainly from an oil standpoint, a little bit of softening there, but still, this is not going to be helpful from an inflationary standpoint. And again, they're talking in relative terms. Inflation's still rising. It's just the rate of increase. So it's much to do about nothing. When you look at overall prices and the amount they've increased over the last several years, it's staggering numbers. And yet they talk about these tiny inflation rates. It's like, well, yeah, you're talking month over month terms, but from an annualized basis, it's not healthy at all. From a euro standpoint, of course, they think that easing coming from America was a reason to buy euros. Not really, because they're still going to have to spend more. And it'll be interesting to see what they do as summer fades. It's easy right now, but they're going to have to refill their stocks for winter, and that's going to be an interesting one because they're going to convert a lot of euros into dollars. From a gold standpoint, filling back in here a little again on these expectations that everything is rosy, peachy keen. They can maintain that for a while, and I think that while crypto too is in its little malaise, with the Bitcoin, at least Mt. Gox, and of course when you look at Bitcoin miners and that the hash rate has fallen off the cliff for those that follow that kind of thing, and that's just because of the halving that took place. Everyone thought that was going to be the super bullish, but now you've reduced the amount of miners that can actually make money given where electricity rates are versus where price is and what the reward is. That's likely to change though, and when that does, that is going to create a liftoff. And once you see a liftoff from crypto, I think that will have an interesting market dynamic because it could shift significant returns into alternative class. So from an ETH standpoint, likewise, still at the 23%, not great, but it's not exactly a horror situation either. I mean, these aren't really going anywhere as far as that goes. When we look at it from our 50K, exited out of the big long setup, and then we had that weakness that came through. And it's usually pretty good about seeing where that happens. You usually end up with this double peak and then fades away. But we talked about this. As long as the DOC steel was under that negative 13, that you'd have the weakness, but as soon as it popped back above you, would get your resurgence, and it corresponded perfectly to that. Same time you had the crossover of magenta, and that was the extra boost, and that's what you're seeing as it relates to this. So all that's pretty much in line with what we were expecting to see. A little too far back here. Let's look at where we're at currently in the post market. Still elevated slightly. If we go back to what the action was during the day, grab it correctly, you can see that there was still plenty of movement. Again, this is that option play. So we started off with that early rise in the morning, filled back most of those positive extremes, then later by the middle end of day, had taken out all the positive extremes. So very healthy from that standpoint. Of course, it does its effect on the options as well. And then later in the day, do the boost right to the end, and then an aftermarket you continue the little party, and that's where we're at this particular stage. So I still think you're going to see plenty of back and forth, which makes the intraday still very effective. And the swings, I think, still a little bit outside of what you would expect from a normal period, but we knew volatility would start to increase, particularly as uncertainty grows. But still, the bias is bullish simply because of where the political situation is and just the dynamic overall of this job booming by the Fed, that they're going to soften everything up. And if they actually do, oh my gosh, that will be an even bigger impetus to push towards that 6,500 on the ES easily. So, yeah, think about that. As always, though, anything relevant, I'll put it on the Skype chat. You have a good one. Trade well.